There's been a lot of talk about redefining banks in this whole process of financial reform. Has that happened?
Not in the least bit. We've kept the structures of the banks the same. We haven't touched the activities that they do. The hope is that we're going to try to regulate them better. And as far as I can see, the principal focus has been on measures to contain the next crisis when it occurs, rather than measures to prevent the crisis from occurring in the first place.
If you could enact some widespread change in the U.S. banking system, what would it be?
If I absolutely had my druthers, I would simply reenact the old banking acts, the 1933 and 1935 Glass-Steagall Acts as they're known. Or I might go back to the 1830s and enact a bank charter which said a bank shall do this, this, and this, and nothing else. So in my ideal world, a bank should only make simple loans and engage in simple hedging operations and nothing else. Now, of course, we're not going to get from there to here overnight, but we ought to be moving this direction, or at the very least, we ought to be having a debate about which direction to move in. What we've done instead is we've simply taken for granted that the direction in which banking evolved over the last 20 or 30 years is the right direction. And we're engaged in this futile and pointless effort to try to, quote unquote, make it safer. And I just don't think it's going to work.